So Frank, the way that I see domains, or a lot of people could see domains are like, unique digital assets, right? We're talking about non-fungible tokens. So for example, a lot of people are getting into the blockchain and I've got this great photograph, this JPEG or whatnot. I want to make it into an NFT. Right. And, I can have people investing in this. So, I see domains as a very similar thing. You've got an identity. So again, you need to know who the identity is. And again, we've got this whole thing with GDPR in Europe. How much do you showcase in terms of who the owner is, in terms of privacy? So I look at domain names as truly the first non-fungible tokens, but they're only relevant if we know who the person that owns them is, if they're truly who they say they are. Because you can right click on a photograph and say, I'm going to put it as an NFT, and there's a lot of NFT scams out there. There's a lot of blockchain scams out there, crypto and all this other great stuff. So I look at the whole, if you remember the big .com bust back in the day, and you were one of the recipients. So let's equate that to like an NFT. So you looked at all these digital assets, and a lot of NFTs today, most of them are worth nothing. So let's say .com went down. It did in terms of the .com bust. And how did you get started? Like when everything's down, like what were you thinking of getting all these domain names when everyone was letting them go? Like how did this process in your mind? What made you believe that this was an enormous opportunity versus the risk, and everyone saying, well, this is not a good idea. .com is a bust.
Everybody said.
How did you see it as an opportunity, and what was the green light?
Well, I mean, it was super easy because names have utility, right? You can build a website on it. It's like a blank canvas. You can create your world on your name, light it up, put some content on it. Now you have an active website that you can communicate with other people. And I remember everybody telling me, oh man, the internet's dead now. Haven't you heard? It's dead. I mean, stock's crashing, but then we all went back to using the internet every day, for new content. I'm going to this website for this, or I'm going to that website for that, or this company's getting online with this tool to provide this service online. So the internet wasn't going away, but the stocks behind it, the flimsy models were melted away, and names I always saw as the complete antithesis of that. It was not a flimsy asset, it was the foundation, right? So if there's anything that has any value on the internet, it's the name. So it just seemed so common sense. It's like the light bulb. It's like saying, yes, the casinos are dead in Vegas, but the light bulbs are still there, and they come on and they still light up and they still glow and do what they're supposed to do. They're a light bulb, and domain names were kind of similar. They were just this sort of foundational element. It wasn't like everybody was leaving the internet. You could tell that. I think that was really where the rubber hit the road. You could tell that people were still coming to the internet to do things, process functions, banking tokens were showing up to do banking online, logins for, all kinds of different things were all just still arriving at the exact same time as people were telling you, oh, the internet's dead, it's going away. And that just seemed like an enormous disconnect. And so it was a happy coincidence that people were letting names expire. And then for a small period in time, I was able to get, almost anything I wanted, without impediment or competition. And that's a great moment, when everybody gives up on something because, they're highly leveraged and you're cashed up and you see that the clearing price is below its intrinsic value. You just feel it. It's palpable, Works the same way whether you're investing in real estate, domain names, public companies, private companies. You just get a feel for, there's something not right here. We were talking about music, and I'll share this vignette. I started a record label right while I was still in the name business. This isn't a post naming thing. I was trying to help some kids locally who were making music in the Cayman Islands. There's a lot of great talent down here. People are doing hip hop, R&B, self-contained artists who really genuinely have talent. They're musical, melodic, just sounds like radio music, feels like radio music or club music. It feels legit, right? So, but these guys have no voice. They're on an island in the Caribbean. It's not calypso music. It's Miami music. It's hip hop. It's New York music. It's urban. It's very like you're in Atlanta, like you're in Miami, like you're in New York, not like you're in like Jamaica. And there is that music down here too, but that's not the artists that we were kind of listening to and trying to cultivate and help out, because I just felt like this is commercially viable music that should be released. Anyway, these guys have no voice, no money, no audience. I'm trying to help them out. So I promptly do what most people do who enter the music business, and I wind up losing about $1 million, give or take, on airfares, music video shoots, production, salaries, record contracts, clothing, jewelry, nonsense, bread.
But at least you're having fun.
I'm having a great time. Artists are having the time of their lives, right? Money, not so much, right? A big bad investment. However, one day I'm in Los Angeles, phone rings. One of the producer guys, legit producer, like real world. You know him. He's worked with artists. Producers. We're having lunch or dinner or something at the Polo Lounge. He goes, "Oh yeah, and you've got that meeting." And my assistant guy who's working in the label with me says, "Oh yeah, you've got this meeting," and I just totally forgot it. And he says, "Oh yeah, and after lunch we get that meeting over at this office with these guys and and the music app form and the platform and the app and So I'm like, okay, I'm just kind of going with it. I got time in my hands. I'm like just sort of following Forrest Gump like the breadcrumb trail. And where does it lead me? It leads me up to the top floor of Fox Tower in Century City, where I'm sitting in the office, and there's Kodak Black, and there's Lil Uzi Vert, and here's this moderator guy, and there's me, and there's there's all these hip hop people and this producer guy, and we're all having a roundtable discussion about how we can work together in the app and and these artists, and bring these artists from Cayman, and how we can do recording down there and record tax-free down in the Cayman Islands and all this. I'm like, I'm over my head. I'm in this, but I'm over my head, right? I'm like kind of being led along by my colleagues who are smarter than I am in this room, right? And I said, I'm sitting here for like an hour. I realized there's like a parade of other people who are coming in, like this hip hop writer, Stara, who I've heard of, and these other people who I'd never even seen her because she always covered her face in her Instagram posts. But there she is sitting across the room. I can look right at her, and I'm like, who owns this company? And it was this guy in the corner says, I do. So I was like, we chat for a little bit, and the company's Triller, right? This app, it's like a TikTok app. So I'm like sitting, I said, what's the value of this thing? And he says, about 130 million bucks. I'm thinking to myself, and this is a really good example. I'm thinking, well, shoot, my business is worth, 300 million. I don't have Stara and Kodak Black and Lil Uzi Vert and all these people, parade of hip hop luminaries lining up to come in to see me, but everybody in this just felt like there's a lot more going on here. The growth numbers, the users, the audience that they control. And it just felt like this is pretty cheap. So I was like, I'd like to, do you need any investors? So anyway, long story short, I walked out of there. I bought 3.5% of the company. So it was a big investment, millions of dollars out the door. I didn't, even for me, I'm not a bottomless well. Like that was big money, just to park into this thing. I remember driving down Sunset Boulevard near the Beverly Hills Hotel right afterwards and thinking to myself, both feeling incredibly elated that I'd gotten into this thing, and both incredibly petrified that I just pissed away, millions and millions of dollars on these guys who could take my money and just disappear into the ether, and I had nothing to show for it. And I could have never had that beanbag chair in that room. Well, that company is worth, they're raising money now at 4 billion, right? So that looks like a very prescient investment. But at the time, you just felt it, because based on the other things that you see and do and know, and just the things that you see happening, and you look at a cap table and you look at the way that the company's functioning, and anything can go disastrously wrong, but it just felt like palpable, right? And that's what I'm saying, whether it's in music or whether it's in whatever, it comes down to, understanding what you're looking at, and then doing a little kind of commonsensical comparative analysis, like which of these things is not like the other, comparing to the other. Well, I know Bob has a company that's worth 10 million and it doesn't do shit. And I know that Dan has a company that's worth, 300 million and it's great, but it's terribly undervalued and has no revenue. And then I know there's this company that's growing, at the speed of light, and it's, it's got a lot of momentum, but it has no revenue, but it has the potential for revenue. And I could see how, we all have the ability to do this. You don't have to be a rocket scientist.
Yeah, that's why your name is Frank Schilling, my friend. That's why your name is Frank Schilling.
Whether you're parking your car and it's raining and to park closer at that meter across the street where it's not raining by the covered overhang, or whether you're parking on this side where it's pissing down the rain and the meter costs twice as much, it's that kind of commonsensical real world analysis that we all do. I'm lucky. You have to be a little bit lucky that you have to have the capital to be able to do this. And you have to be a little bit reckless, where like, who the fuck would give $4 million to some stranger?
Yeah, talking about reckless.
Be a little bit reckless, but otherwise you're not going to get that big reward. You know, how do you
Right.
turn 4 million into 40 or 50? You need to you got to take that risk at that moment in time. And now I look like a goddamn genius, but I'm not. I'm just a little bit reckless and a little bit commonsensical that I can do that. Which of these things is not like the other? We can all do it, but we won't do it. We'll be like, ooh,
Yeah.
there's a lot of hand wringing in the moment. Should I give that money away? Ooh, I could do this. I could do that. I could buy. There are a lot of things you can buy. So,
Yeah, I had the same dilemma. I had the same dilemma a few years ago. Again, we applied for Dot Music in 2012, and what came out of it was the competition that we didn't know who was competing for Dot Music. And it came out, it was a company called Google, very small company, another small company called Amazon. Thankfully, Frank, you weren't one of those folks.
I met you in 2011 and you told me your passion for that.
Obviously, everyone wrote us off. And I would always get this thing in the back of my mind. Am I crazy? What am I doing? This is reckless. And the only thing that we have in life is our time on this planet, right? So I've been working on this for a long time, and we only applied for one top level domain. So my company only applied for one top level domain, that was Dot Music, and we were all in at this. But at that time, when everything came out, we're like, okay, we have to deal with Google, Amazon, a bunch of others. How do we do this? Am I being reckless? I'm spending money left and right, and my team, and we're sitting down and trying to figure out how we're going to win this, and is it possible? We went through the community route with ICANN, and that was an entire mess that took ages and ages and ages. But again, like if you want to be an entrepreneur, again, even if you're a musician, look up musician, extremely competitive. There's like 60,000 songs, is it a day, that go on Spotify. You've got all these bands, and Daniel Ek from Spotify saying they're going to have 50 million creators in like a few years. They've got 8 million creators now. Like, how do you compete? How do you differentiate yourself? The problem that I see with most artists, and again, I want to pivot back to the music industry and musicians, is that everyone does the same thing. Most artists do the same thing. They follow the same formula, most of them. And if you're trying to be successful, you need to do something different. You need to differentiate yourself. What makes your music better, but more importantly, and I won't stress this enough, and again, I always go crazy when I hear this in the blockchain community about a decentralized music. No, it doesn't work that way. You've got middlemen that are important. The labels are important. The publishers are important. The hairdressers are important. Everyone that's involved in the entire supply chain is important. You cannot change and make everything decentralized. It doesn't work that way. It's about relationships. It's about people believing in you. It's about having a team. It's about grinding. It's about experimenting and failing, fail again, fail again, fail again, fail again. And that's the one thing that I'm quite frustrated about is, when you look at kids today, the younger generation, everyone's protected. They don't want to take any risks because of the risk of failure. I know with Dot Music, we filed 20 objections with WIPO and the International Center for Dispute Resolution. We lost 20 in a row. Then we filed about 20 to 25, reconsideration requests with ICANN. All of them were denied. So failure. I don't know how many failures we've had as a team on Dot Music, but we were grinding. Okay. And you learn and you take everything in and you're like, okay, we failed, but what did we learn here? What can we do better? Who can help us? Who can we talk to? And that's why I'm so grateful, for my team, because when we were down and when this process started, we were a few people that believed in what we're doing, and everyone wrote us off. And I think it's the same for musicians as well that are starting from zero. It's what do you do that's different? How is your music unique? How does it not sound like everyone else? And I'm always about how do we improve ourselves, our team, our music, And I even look at the great people that do search engine optimization. I'll just give you guys an example. There's this guy called Neil Patel, which I think is quite brilliant, but he puts out a blog that ranks really high in the search results, right? And then every often with data, he sees all the statistics, he changes it when news is more current concerning that subject matter. So he's updating that content every day. So it's the best content out there and it's updated. So everything that's related to that specific topic, it's like a Wikipedia basically. And that's the beauty of Wikipedia. You can scale Wikipedia. That's why it ranks so high, because you've got all these people providing, again, it may not be the most accurate information, but you're scaling it. You have people providing information and it gets a higher ranking because it's recent. And it helps the Google algorithm give you the results, which is based on you're the most relevant result, you're the most authoritative result, and this result is what others linked to you believe is the best result. So again, linking and the ranking in the search results is half the game. So it's like music. The more fans you have listening to your music, the more successful you are. Just the same with a link on a website. The more links that link to you going to your website for coming from a specific entity that's related to your marketplace or what you're doing, the better your search engine results become. So again, I see music very similar to ranking and search results. And I'll give you guys the biggest problem that's the most frustrating when it comes to the music industry with Google. I know we're all complaining about Google, but most artists don't do the basic things. And I'm saying very basic things. So for example, if you go on Google and you type in whatever band, let's say Madonna, Like a Prayer, right? So Madonna, Like a Prayer, search. All you see are YouTube results, and you never find Madonna.com. You're gonna ask me, why can't we find Madonna.com for her songs? It's because Madonna.com doesn't treat her song as a specific product. So instead of creating a URL for, you know, the specific song, put lyrics, create content, and have people push it, it's all about the appearance. So everyone's treating their .com as, you know, they're not treating it as a product that needs eyeballs and helping and feeding Google what they want in order for it to rank. So again, it's all about being relevant, authoritative, and providing Google what they want. So for example, a big artist, Billie Eilish, for example, her song Bad Guy is not even on her website, right? So how can it rank if you don't have your song on your website? So with .music, what we're trying to do is fix that issue. First of all, we need to deal with digital identity, and that's the biggest problem in the music industry, because everyone talks about metadata, but hey, if your digital identity is not there, your metadata doesn't matter. And I'll give you guys the greatest example. A few weeks ago, we were interviewing some artists to get information on what we're doing with .music, and I asked them, can you show me your Spotify profile? So she said, I'm not going to say the name of the artist, but it was a short name. It was 6 letters. And as you know, short letters, it means like artists have the same name as you. So let's say like Bliss or Rain or John Williams, for example. So we went on Spotify. There were like 5 bands with the same name, and his music was played by some other artist. So if you click on the artist profile, it wasn't him, it was some other artist with the same name, and their songs were under that other artist. And this guy was a reggae artist, and the other artist was a rock band out of Europe. It's quite fascinating, but it's the case of garbage in, garbage out. If your digital identity is not 100%, then you've got a problem. And even when I go to Music Brains to check out how many artists actually have an international standard name identifier, which is this number that identifies you as a creator. It's like this global standard. 95% of creators or musicians on Music Brains, it's about 2 million artists that I saw, 95% don't have an ISNI number. So we're trying to help with that as well. So that way, a specific creator can be identified with an ISNI number to help with payments, identity, and all this other stuff.
Constantino's brother. So like you hit on a really interesting point, right? You got that Google thing is really interesting. So, but Google has been a very big beneficiary of that because they control now that human behavior. Everybody goes to Google. They know that I'm just going to type in what I'm looking for, and more or less I'm going to find it. Their algorithm is clever, and search is a very difficult problem, as Larry Page once said, right? He solved it, right? And the world is beating a path to his company's door, right? And they're the happy beneficiary of this lack of organization or lack of uniform organization. You as an entrepreneur with .music have like a good opportunity to say, okay, well, I see a problem. Like it's all going in music. It's all going to, you could become like the Wikipedia of music where, you're sort of sub-indexing and out Googling Google by doing a better job, and so when everybody searches for something, often Wikipedia bubbles to the top because Wikipedia has out Googled Google. They've done a better job organizing the information, coming up with authoritative information that everybody links back to, thus forcing themselves to the top of the index, right? So they've kind of done a great job out Googling Google and coming up with a better position, and uniformly rank for almost every topic or subject or name or person of interest, right? Wikipedia is usually in the top 5 results, right? Similar where music's concerned, you could solve that problem similarly. You've identified the problem. If you can organize the information, do a better job ranking it, but that is the user experience that you're going to have to solve. It's not like a great name is a great entree, right? It's inspiring to you. You could have gotten .music with an N instead of a music. And, if you were passionate enough about creating that user interface or platform that you can out Google and like Wikipedia bubble to the top and do a better job organizing the information. And, you will be able to do that. It's a happy coincidence that music is a top level domain. It's inspiring. It's, something that people identify with. And so if you can use that as a launchpad, but that's all it is. It is a launchpad. It's the best launchpad because it is what it says. It's self-descriptive. There's no denigrating it. You don't have to brand identify it. It's just natural turn of phrase that is not going away. Happy days, but it's not a magic bullet. You're still going to have to create that platform. Otherwise, the name will have its natural gravitas and ability to sell through GoDaddy, through another registrar. You will have revenue as you would with another namespace, and maybe even more so because it's such a great namespace. But that said, without the platform coming late to the game now, because it's taken you a long time to get that insertion in the route, a lot of the trains have left the station long ago. And the new TLD ecosystem is what it is, right? It's out there, and this is what they have become collectively, as a group, right? New TLDs. You are now coming late to the party. You really do need that platform and you need it to shine like a dollar bill. You need it to really do a good job. That platform has to sing, pardon the pun, and dance,
right.
And dance, and so you've got your work cut out for you. You really need to think it through carefully, because you're going to get your natural buy-in. You're going to get people who will do anything to be at a .music. They'll stand naked in the courthouse square because they want to be at a .music. Great, that you got that. But to really out Google, to become the Wikipedia in the search result, to become to do the better job, you're going to need to come up with a great platform, and that UI needs to shine like a dollar bill. It needs to be amazing. It needs to blow people's hair back.
Right. So yeah, I agree, and I also see crypto as quite an interesting development as well, because you did some stuff with crypto with your TLDs, and a bunch of other people have done some interesting stuff. More on blockchain, not crypto. Excuse me, same thing, I guess. But again, when I'm looking at .music, our thinking as a team is, look, .music should be an identity. Like it's not a web address. It should be an identity, because again, a domain name, when you look at the brilliance of the internet, it's interoperable. Everyone uses it. Anyone can access it, and that's the problem with that I see with blockchain is everyone's doing their own blockchain, and who's going to be the winner? And the thing is, you need mass adoption. You need everyone to use it. It has to be simple and it has to be interesting. But again, I always go to the root of the issue, which is we need to solve identity. Identity needs to be solved before we move into assets. Assets are very interesting, but if you don't solve identity, if people don't trust who you say you are, then that's a complete problem. And again, we look at all this blockchain coming out, all these technologies and everyone's saying, Solana and all these other organizations, Ethereum Foundation, everyone says they're decentralized. It's not true. They're not decentralized. If you look at Solana, 48% of their tokenomics is owned by their core team and venture capital that put in 300 million. They control that asset. It's not decentralized. The only thing that's decentralized is obviously Bitcoin, but that's bad for the environment. It's slow. It can't really solve a lot of problems. I see it more like banking, gold or whatever it is. But it's quite interesting. I don't know if you have any views on music and blockchain or anything like that. But I think there's a lot of exciting developments happening, and we're not there yet. It just seems a lot of people are trying to come up with a solution and then try to add blockchain to it to solve that solution, which is kind of backwards. But I don't know if you have any views on crypto and blockchain.
Crypto and blockchain, like I think in general, are just like they're symptom. Like well, crypto. So blockchain is a great anchor system that it's sort of like DNS. It's like a sub ecosystem that's decentralized that anybody can hinge to. That's universal and uniform, and it has a lot of. I think a blockchain, like the internet, it has a lot of different elements, a lot of different facets, can be used in different ways. It's decentralized, nobody controls it. So blockchain in general, I think there's lots of different use cases where it can be brought to life. Crypto is more symptomatic of people thirsting for a return. Like I can't freely spend crypto. I have to work to spend crypto, right? I have crypto, trying to get it out and trying to spend it. Like you get some people are like, sure, I'll take it at a deep discount where I can make money, or I'll trade you for some of my tether. It's like, oh God, it's like there's nothing spends like cash. Firstly, cash is truly king, right? But the thirst for crypto is partly a symptom of a problem, that there's too much cash sloshing about. Like it took from, let's look at this big picture here. Like it took from George Washington, first president crossing the Potomac in a fucking rowboat, to George Bush Jr. to get to 5 trillion in national debt. Okay. Then it takes, now we're at what, 30 trillion from George Bush to now 30 trillion. So it takes like from the beginning of the Republic to that. So it's an inflation problem. Where did the money go? We've all bought, we all took trips. We all built airports. Everybody got a little piece of the action. We all got a little richer along the way as money got printed. It trickled down from government into private enterprise. That guy who had a government contract, who bought a giant house in Palm Beach, well, he hired, my second cousin to do his kitchen, and my second cousin got some of that money that came from the government. Ultimately, all that extra money printing, and these people are looking at where can I make money with all this extra money? Real estate seems to be getting crazy expensive. Not really. It's just there's more cash sloshing about chasing the same fucking real estate. So it's like, this is all a broader problem. I'm not smart enough to know how it all manifests itself, but I know that all roads lead to inflation. The $1 million stake, and maybe not $1 million stake, but $1,000 stake is coming to a neighborhood near you. Unthinkable like 10 years ago, but now possible, So crypto is like symptomatic of that. At some point, people fear that there's just too many people with too much cash. They're looking for some alternative. As a guy who's at one point in his life invested in lots of physical gold, I can tell you there are problems with physical gold. You got to store it. You got to pay somebody to store it. You got to make sure that person doesn't run away with your gold. It's heavy. Like moving a bar of gold is heavy, and it doesn't hold that much value. Your wristwatch is a better investment than a bar of gold. So in terms of its portability, getting over a border, yet more tightly regulated. Like you can walk over your border with a $200,000 watch. You can't walk over the border with a $200,000 gold brick. It's hugely problematic. They'll arrest you or make you fill in 40 forms. I've done it. Let me tell you, it's hard. So crypto is easy. It's decentralized. It's got a lot of people that don't have any that are looking at it. So there's a natural growth in its value. So a lot of people are buying in. I don't think it ends particularly well in the long run because the growth velocity of it is too quick and the underpinnings too flimsy and not enough and too easy to tax and outlaw, as China is doing. The more powerful crypto gets, the more powerful the central banks, which are the ultimate issuing authority, because they have the ability to tax based on it. The more risky it is to governments, the more governments will say, you know, anybody who has crypto is a criminal. Well, watch what fucking happens. Like, in a New York minute, all of a sudden your holdings become worth a lot less because government says, well, you know, I'm a criminal if I hold it. You can, you know, thumb your nose and say, well, the government's wrong. But, you know, do you want to get into that fight, really? Like, you know, just know your place in the universe with crypto. Watch when the balance starts to tip, because you don't want to wind up on the wrong side of it when governments outlaw it. They outlawed gold in the 1940s after during World War II. They said, everybody turn over your gold because we need it for war effort. So anybody who has gold, you're a criminal if you're holding it at home. Just turn it over to the bank and we'll give you these American dollars that are just as good as gold, right? And everybody dutifully did. Today, people would say, well, I'm not doing that. I'm going to hide my crypto. Well, now you've crossed the line, you're a criminal. So I'm not saying that's where it's going, but I'm saying that there's a high likelihood of that, you know, this idea that crypto is going to somehow sweep the world and the governments will be swept aside and all government currency will be worthless and they'll all be crypto. That's just crazy fucking talk. Let's all just smoke a fatty, like do some mushrooms.
So let me ask you, I mean, you look at something like Coinbase, for example, you know, you do KYC to go on there.
Governments have the ability to
I mean, that you give them your private keys.
So, you know, no. Listen, governments are ultimately in control because they need the ability to tax their people to make society function, right? So as long as you believe that and you don't think we're going to go to anarchy, you know, and I don't, I think we're going to wake up tomorrow morning, there'll be a government, there'll be a flag. I don't know whose flag will be flying, but somebody's flag will be flying and there'll be a president of that country flying what country I'm living in. Right. And as long as that's the case, somebody's going to have to generate tax revenue. In order for that to happen, you need to have a currency that's ultimately controlled by government, right? That's what's going to happen.
Right. Like personally, I believe that blockchain. Again, I'm not the biggest proponent of decentralization. I do believe it should be a hybrid model because I think that's safer for everyone, and that's how I see blockchain. And I think there's going to be a lot of innovation coming up with blockchain. I know we're looking at it, and it's a really interesting place. But again, with blockchain, you got to look at the technology, and you got to look at what does blockchain do that's good and better than the existing technologies that we have out there today. And I think a lot of people are not really looking at that. And I think it's kind of problematic. But I think there is a future for blockchain. There's going to be some winners, but 99% losers. I think
blockchain and crypto, Constantinos, blockchain and crypto, two different things. Blockchain, central platform, like Earth, like planet Earth. Okay, blockchain. That's how I see it. Right? It's like it's everywhere. It's not going away. The blockchain, it's decentralized. It's the mother Earth. It's the base. It doesn't make money. It doesn't lose money. It's just a platform. It's a flat canvas. Right? Blockchain, crypto, one currency or another. Ethereum, Bitcoin, whatever is a platform on the blockchain, right? So it's like you know, and those are investable assets. You know, I don't think a blockchain is not a good or bad or anything. It just is. Crypto, you know, I don't have I have a horse in the race, like in terms of an investor, like anybody else would, but I see it as riskier, a much riskier asset. A lot of people don't see it that way, but I see it as, and I think there's a lot of volatility, which is good. I think it's a great way to invest, but you should just really don't put your family treasury into it. You know, like if you can make money along the way, great. Harvest, take your profits, move it to something else, diversify, right? Because I see it as, you know, very, very volatile and subject to great risk. I see friends who are like, I'm going to just hold my crypto and I'm going to hold it forever, and that's all, and it'll be great. And I think you can. I know a lot of my friends have made great dough in it, as I have, right? But I see it as very volatile. You know what I mean? And I see a lot of downside in crypto because there's just
So I wanted to, you know, maybe you can provide your insight. Again, this is not financial advice for anyone on here.
No.
But the way that I see crypto, for example, when I look at companies, is that I do investigate their tokenomics, which are really, really important. So first of all, you need to look at how many developers does this blockchain company have? How many are actually using it? Another thing that I always look at is how many nodes do they have? And more importantly, you want to look at the 24-hour volume in comparison to the market cap. If the volume is really low in compared to the market cap, you've got a huge problem with volatility. And these are basics, but a lot of people are not even looking at basics. I don't know if you have any insights on how you see crypto investment, or just looking at it.
My thing with it, what I don't like about crypto, the thing that keeps me up at night is the black swan event where it's like sudden enormous loss, you know what I mean? Which is entirely possible. And a lot of guys that I know that are in crypto are levering it, right? So, I mean, if you're borrowing the money, you don't own all your coin, and it devalues and you're borrowing on the margin, you're wiped out, right? And a lot of the people that are doing this are just trying to, regular folks trying to make a return and think this is a good way, because it's kind of like jumping up and down on a piece of plywood over a gorge, and it's solid and then all of a sudden it just gives way. That's a black swan. I didn't think the plywood would break, and I'm falling down into a crevasse and to my death. It seemed solid to me, and that I see it as uniquely flimsy because so many people are promoting it, and so many people have a vested interest in the cycle only going up. So, and I know that, like just that one day move like that China made, where they're like, okay, we're outlying it. We're outlying this, we're outlying that. We're making it harder, and I think it's a real slippery slope. The more inroads it makes, the more big downdrafts will come, because people will fight against that, don't want it, right? Governments don't want it. It doesn't make it right, and it doesn't mean that money can't be made along the way. It just means I see there's no intrinsic value to it, right? And I can't easily spend it. That's my biggest problem. I can't easily spend it. I can't walk into the 7-Eleven and my friends who are like, hold on your crypto, it's coming. I'm building an app. I'm going to be able to swipe it. You'll be able to scan at Walmart. When that happens, and it's been around for like a half a decade, and you can swipe your crypto at Walmart on your phone, and it's been going on for like a half a decade, there will still be billions to be made in crypto, right? At that moment.
Yeah.
It'll be much.
So we have some questions. We've got some questions from the audience here.
Yeah.
Let me see. All right. So, and Circa, yeah, love you on board, Tom. Malik, when can we expect our pre-registered .music domains? Again, I wanted to say that a pre-registration doesn't guarantee the .music domain. We're going to go through a verification process, and we're planning on launching this at the beginning of next year, or somewhere close in 2022. So that's going to be interesting. We'll keep everyone posted. If you pre-registered, you're on our email list, and we'll let you know when things are getting ready. Obviously, we're working with ICANN to get through the phases and policies, and there's still some stuff to do. Last question, what do you think of United Masters and hopefully more distribution platforms allowing artists to get paid in crypto? Well, I would say that's great. Don't lose your private keys. And again,
take the cash off the table.
I think it's interesting. What do you think, Frank, about
get paid in crypto or convert it to cash? I mean, that's a great trade. If you can get paid, I mean, that works in reverse, right? Like if you're the recipient of crypto and you can convert to cash, you have a good ability to not tether cash. That's great if you can do that. But that's the big problem, is liquidity, real world liquidity. I have friends who are like, I don't want to get entirely out because I want to be able to get back into it, but get more crypto because I want to be able to ride that. I get it, but you got to be able to take money off the table, and that's really the key.
Yeah, we have this perfect storm, especially in Europe right now, where let's say you have money in the bank, it's like a negative interest rate that they're giving you, and they're not even giving you. You're losing money by keeping your money in the bank, and then you've got natural inflation. What is it, 5%? So basically, even keeping money in the bank, you're losing. So
I get it. I'm doing European real estate because it's undervalued compared to U.S. real estate.
Yep.
There's real capitalization rates, and if everything goes to shit, I'm betting on the city block in a downtown European city that has a pharmacy in it. You know what I mean? Like that to me has real intrinsic value. That block had value in the 1940s. It has value in 2021, right? So, I mean, you don't have to do it at that level. You can go to, some small town near a big city that has a small pharmacy or a bakery. But the point is, European real estate like that is very undervalued when you compare it to like commercial real estate in the US or commercial real estate in Canada or in any of the Commonwealth countries. Like, you know, I like European real estate. I think that's it's super undervalued.
Yeah,
And
if you want any property in Cyprus, let me know. We've got a few over there. But just to end this, well, I'm sure Tom is going to come in soon because I think we're towards the end of this great talk. Fascinating, Frank. Wish we had longer, but this was amazing. Just to tell everyone, you know, when it comes to crypto, when it comes to investments and everything else, please diversify. Don't put your eggs in one basket. Always don't believe everything, trust but verify. I mean, it's the wild west out there once again. So I'm excited with the music.
Wild West is good. Wild West is good. You can make a lot of money in the Wild West.
Exactly.
But you want to be the guy who rides off into the sunset on the horse, you know, not the guy who's buried at Tombstone. You know, just bear that in mind about the Wild West, right?
Yep.
Well, guys, let me jump in here, and you are correct. I'm afraid we are out of time, but this has been fascinating.